Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Eddie Tofpik, Head of FX at ADMISI, and we're going to look at some major currency pairs this morning, Eddie. First off, sorry, thank you for coming on the show. So it's a pleasure to have you in Thursday already. Let's have a look at euro dollar from a technical point of view.
Well, there was opportunities for it to go higher, but it seemingly always has failed. And now we've developed this channel line with a possible bear flag, which hasn't fully developed as yet. But the move down, we've had the first move down, which was the small head and shoulders at the top. That was the marked X on there. That's already happened. X2 is the second shoulder from the neckline. So that's basically from about 116.75 down to about 114.25. That's still to happen, and we have a hell of a lot of support, which is between about 115.10 and 114.66. There's a real area of support there that I think it's going to have an issue with, including the bottom side of the lower side of the channel. Now, once that's achieved, should it come, and it may then go all the way back up again to about 16.5, which is fine. The next target, which is a full head and shoulders, which is down about 112.70, 60 area, that's going to find support coming in already above it, which is the long moving average, which is a 112.88, and will be rising by that time as well. I imagine it'll be well over 113. So it's pointing downwards. All the indicators, with the exception of the medium and the long moving average, are all pointing downwards. There's a nice channel line there. We've got two nice head and shoulder patterns. It's just waiting for it to have a crack at the downside. Obviously, if it breaks through the top side of the channel, which is around about 117.5, all bets are off.
Understood. Interesting trade though, for sure. Moving on, we're looking at euro sterling. Obviously, Brexit negotiations, etc. From a fundamental point of view. But on a technical point of view, what are we looking at here?
Well, we have this pattern of congestion, which is from mid-September till now, which is basically between about 90.25 and say about 87.25. And we've gone backwards and forward to form a nice little double top, which the target, if it should go down to, would be marked X, that's 85.5. Now, is that a halfway hesitation or a double bottom? If it's a halfway hesitation, then the next target for that would be something like X1, which is around 84.70. If it's not, then we're all way back up again at testing the highs again, and potentially the 21st century high, which is slightly off the top of the chart. So it's indecisive. At the moment, it's looking more bearish, I would say.
Would you say it's more neutral though at the moment?
It's neutral because it's caught between the medium moving average and the long. So the immediate resistance is at 89.5. The immediate support is at 87.65. So that's the neutral zone, and you know it's caught in between those two areas. You need two consecutive closes, above or below, to try and see the direction, and it's not showing that at the moment.
Okay, certainly one to look for confirmation if it does move there. Moving on, looking at the Great British Pound versus the dollar.
Similar reflection in that respect. We may have a potential double bottom there. We've got a nice uptrend there which comes through just underneath 130 at the moment, but we'll be pushing over that. If it's a halfway hesitation, target's 127.60. If it's not, then we're moving back up again. But again, a not dissimilar thing, except that we're a leg up. We're using the medium moving average, which is at 131.04, as basic closing support. We've had two closes below it, but it failed and turned round again. So it's diaphanous. It goes through the thing, but it doesn't actually like being below it. So at the moment, yes, there is a tendency potentially still to be a halfway hesitation, but there is an option now for it to go higher. So again, more towards a neutral, and that reflects in euro sterling, which is the previous chart.
And we see before the key reversal up failing.
Yeah.
It's got to target that and then trade above that consecutively.
If you have continuously things like key reversal ups and they fail, then obviously it's telling you something. If you have now, as you've had this move down a week after that, a big move down, and then there was no exploitation of that, what does that tell you? It says it doesn't really want to go in either direction. We're going the third way possibly for a while, which is literally sideways.
Understood. And finally, looking at dollar yen, interesting. In a previous video with a guest, we were looking at the Nikkei and a huge strong performance, and how sometimes the dollar yen works in lockstep with that, but there's been a huge divergence on that, and that's interesting. And in theory, if it was to track the Nikkei, it should be trading up at 127, which is obviously a long way off from where we are at the moment. But looking at dollar yen, on its own, technically, could we get there?
There are so many positive things on the build-up towards this move to where we are now. We've had a big potential halfway hesitation. We've had a pipe bottom a couple of weeks ago, back in mid-October. We've had key reversals up on the weekly chart. We've hit the resistance, which goes back from July, which is at 114.5. We need 2 consecutive closes, ideally 3, because this is pretty good stuff. And the Japanese are the most technically minded of all of them, because that's where TA comes from. So I would say 3, but the chances at the moment are still for 117.25, which is the top side. But if it doesn't do it soon, then we're heading back down to test a long moving average, and that's going to be down around 111.75. So we need a movement soon to confirm it. Otherwise, 2 things will happen. We'll start going sideways again, which, to be honest, isn't the end of the world, but it puts the chances of it going higher off for the moment. We'll be put, literally on the back burner of the cooker, and they'll be just sitting there looking out, and we'll just wait until it simmers for a bit.
Okay, so as you rightly say, look for those breaks and consecutive breaks above.
Just be careful of key reversals. They're very suspect sometimes on these ones. That's the only thing I'd say.
Good stuff. Eddie, thank you very much for joining us today.
Thank you.